Hello ladies and gentlemen, this is your teacher Usman Ali and we are discussing the solution of the problem 5.6 in which we are required to prepare a cash flow statement for the company. Now the information given to us is the previous year or the last year balance sheet is given to us which is 2013, and along with this balance sheet the information related to 2014 is also given to us, and we are required to prepare the cash flow statement for 2014. So for simplicity purpose or efficiency purpose, I have taken the screenshot of the numerical and I have shifted it to the Excel sheet so that we can have a question and the solution at one form or in one picture. So starting with the cash flow statement, first we need to write the name of the company, the cash flow statement, and for the year we are preparing the cash flow statement. Then as we are preparing an indirect form of cash flow statement, so an indirect form of cash flow statement starts with the figure of net income. Okay. If you see here in the information number 6, the net income information is given that net income for 2014 was $32,000. So I will shift this information $32,000 actually to my cash flow statement, and what I will actually do is I will highlight this also just for a reminder that this portion is done. We have taken this information actually. Okay, so this is how we will do it. So net income is done. Our next job is actually to know if there are any changes in the working capital of the company. Inside working capital we have current assets and current liability. So among the current asset, the first one we have is cash. We do not consider cash inside the operating activities. You know the reason because of our previous videos also. So the next current asset that we have is account receivable 21,200. So we are actually required to account this if there are any changes. So in order to go for it, if you see here, let me take my okay. So if you see here, we have account receivable was 41,600. Okay, so our account receivable was 41,600 when the year 2014 ended, but when it started at that time it was 21,200. So what I will do, one, I have to decide is it an increase or decrease. So from 21,200 it has gone up to 41,600, so there is an increase. Increase in asset is a cash outflow. One, remember this thing. Second, how much increase is there? So 41,600 minus 21,200, so the increase is 20,400. Okay, so I will write here increase in account receivable. And how much was the increase? 20,400. Increase in asset is a cash outflow, so I will write that in a minus figure, minus 20,400. Okay, then if I proceed, so I see that there is no current assets remaining. Okay, we are done with the current assets. Then what should be the next part? The next part of the working capital is current liability. We do have a current liability here by the name of account payable $30,000. Okay, but if I see here in the question, so let me highlight it as well. So we have an account payable actually at the end of 2014 and it remained at $30,000. Means they were $30,000 and now they are again $30,000. In other terms, we can say that there is no change in the account payable. If there is no change in the account payable, this thing is not related to or not recorded in a cash flow statement because there is no change. It's not changing the cash position of the company actually. Okay, so we are done with the current assets and current liability. Okay, note payable is long term, so that's not a current liability. That portion is done. Our next portion of the operating activity section would be the adjustments of non-cash expenses, gains, losses, those kind of thing. In other words, non-operating activities. Okay, now let's discuss those things. First, let's go for depreciation if we have any depreciation. Okay, we will do the easy part first. Now if I go to the information number 6, we have a depreciation information given to us that the depreciation of the company was or is $11,000. Okay, so $11,000 is a depreciation expense. I will write it here, sorry, not here. Okay, depreciation expense, and then we will write the amount here 11,000. Now you also know from the basic discussion of cash flow statement that non-cash expenses will be added back. Okay, so it's that they, in reality, a non-cash expense means it is such an expense which is subtracted inside the income statement, but no money was paid or will be paid. So it is something which is not affecting the cash position of the company. Okay, remember this thing. So that's why I plus the depreciation expense, or if it is amortization expense, I will do the same thing, or if it is a depletion expense, you know that we have these tangible assets, intangible assets, and natural resources. So all these three form will be added back because all these three represent non-cash expenses. So this is the adjustment of that. Now let's see if we have any gain or losses. Okay, it means non-operating gains or losses if we have any. Now look at this information here. It says that the company has sold off its investment portfolio for $15,000. It means they had some investment portfolio. They did invested their money in the financial securities of other companies actually, and they sold it on $15,000. So they received actually $15,000. Okay, now this transaction resulted in a gain of $3,400 for the company. So actually, with the help of this transaction, the company has gained $3,400. Now the question here is this gain and what you say operating gain? Is it an operating revenue or a non-operating revenue? Why I have to ask this question? Because I am preparing operating activity section here. So I need to ask this question, is it an operating revenue or a non-operating revenue? So in order to explain this operation, non-operation, and the treatment of the whole process, I have prepared a fake figure example here. If you can see here, ladies and gentlemen, this is a fake example. Okay, these figures are not related to the company of which we are preparing the cash flow statement. No, okay, except my gain on sale of investment portfolio. This is the figure I have just taken actually because I wanted to explain that how 3,400 was used actually. Okay, so let's say the company we are considering here, let's say they had a revenue of operating revenue of $1 lakh, 57,000 was their cost of goods sold. So when they subtracted that, they got a gross profit of 43,000. From there they subtracted selling expenses, admin expenses, and etc. So there could be other expenses as well. Okay, I have not considered them, so I've just written it 0 here. So when you subtract all these expenses from the gross profit, we get our earning before interest and tax. This earning before interest and tax can also be actually called as operating income, if you remember from our income statement chapter discussion. Okay, after this 33,600 EBIT, then we subtract or add if there is any non-operating gain or non-operating losses are there. Is it okay? And these are fake. This is a fake example. Okay, whatever you see these figures, I will highlight it for your reminder. So whatever you see in the yellow region, this is all fake figures. I just created these fake figures only to explain the blue line, and that's it. So that's why these interest expense value, tax expense, or these values, I'm not using it in my numerical. Okay, so actually when the company created the income statement, so they actually did like this, that they had a gain on the investment sale 3,400. So they plussed this money. Okay, and you can in a sense say that inside this $32,000, inside this 3,400, I will write it like this 3,400 is present inside this $32,000. It's like kind of connected thing. Okay, now the question is that this $32,000 is an income accepted. Is it income only based on operations? No, it's not only based on operation. It has 3,400 non-operating income also. So then what should I do? I should split it, separate it. Is it okay? Splitting it, separation here means I should minus it. Remember this point. Okay, so when I write here gain from sale of investment portfolio. Okay, so when I write this thing, So I will write here minus 3,400, not plus 3,000. Okay, the confusion could be that it is a gain. So gain increases my money. It does increases your money, but we are focusing on operating activities here. When I talk about this $32,000 gain, it has two portions. It has the operating portion. I will color it with, let's say, green, and then it has a non-operating portion also. Let me color it in, yeah, it has an operating portion and a non-operating portion, so we must subtract that. Then you may have this question in your mind that, okay sir, I got the point, you subtracted 3,400. Okay, so it's fine, we need to take it out because it's a non-operating activity. Why didn't you subtracted 1,000 or others? Because these are remaining figures, the yellow color figures are fake figures. I just wanted to explain it. If these figure information is given to us in our real numerical, so obviously I will write it here, otherwise I will not write. Is it okay? So this is how you will adjust the gain of sale of the investment portfolio. What if you have a loss? We have another numerical on loss, so we will discuss on the loss also, that if you have a loss, then how you gonna adjust that. So that's it. We have our net income, we have our working capital, we have our depreciation adjustment and the other adjustments as well. We can conclude it that what is our overall cash flow. So our net cash flow, or you can say net cash flow from operating activities is $19,200. I hope you got this point. So let's move to our second part, which is investing activity. I have rubbed this highlighted portions because when I scroll down, so there will be a little bit disturbance. Okay, so that's why I just rubbed it. Okay, so investing activities. Now inside investing activities, if you remember, we account for the long lived assets if we have any. Okay, so first investments, $32,000. This is a long lived asset. So at the start of the year, we had an investments of $32,000. Out of this $32,000, if you remember, in our first information, it was said that sold a part of the investment portfolio for $15,000. It means we received $15,000 because we sold investment portfolio. So if I'm receiving money, there will be a plus $15,000. Okay, and what is the reason of this receiving money, source of this money? That is because I have made sales of investment portfolio. So out of $32,000 worth, some of the portfolio I have sold it and I received $15,000 from that portfolio. So this was information number one. So information number one is actually done completely. Then next information is a tract of land was purchased for $18,000 cash. Land is a long-lived asset, so it means it is related to investing activities. Then it was purchased for cash. Money was paid. Money was paid. How much money was paid? 18,000. So it will be $18,000 cash outflow. And what is the use of this money? The use of this money is land was purchased. Okay, so I can say land was purchased, or you can say increase and land decrease. So these accounts can be discussed in increase and decrease also. Okay, so we got the land was purchased also. The next information we have is long-term note payable. Long-term note payable is a non-current liability, so it is not related to current assets. So that's it, we are done with our current assets. Okay, we can very easily now calculate our net cash flow from investing activities. So let's calculate that net cash flow from investing activities. And what will be our net cash flow from investing activities? Our net cash flow from investing activities is $3,000 actually. Okay, so this was the net cash flow from operations, and this one is from the investing activities. Okay, the next part that we have is related to financing activities. Let's go to the financing activity also. One, what comes under the scope of the financing activity? Long-term liability, and the whole part of the equity section comes in the scope or under the scope of the financing activities. Okay, so number three, the first two were done now actually. So long-term note payable in the amount of $16,000 were retired before maturity by paying $16,000 cash. So the liability finished, liability got decreased by paying $16,000. So there is a cash outflow of $16,000. Cash outflow means $16,000 minus. Why? Because note payable was actually retired. Okay. The next information number 4 we have is an additional $20,000 in common stock was issued at par. So more common stocks were issued. If you are selling more common stocks on investors, so obviously investors will give you money because they are buying from you. So issuing a common stock, increase in equity or equity is a cash inflow actually. So this will be plus 20,000. Okay, and I can write here the issuance of common stock, or you can say increase of common stock as well. Increase in common stock, $20,000 plus. Okay, number 5, dividend of $8,200 were declared and paid also. So dividend money was paid. Dividend payment is a financing activity. Dividend received, that's related to the operations, but that's another discussion. Okay, so dividend paid is a financing activity. I will write here dividend paid. How much money was paid? 8,200. So if it is paid, then it is a cash outflow. Okay, that was number 5. Number 6 was already done. If you remember, net income was recorded at the start of the numerical. Okay, and depreciation was also recorded here. So number 6 was done. Number 7, land was purchased through the issuance of $30,000 bond. A current and long-term asset was actually purchased, but money was not paid. Bond were given in return. So if you see here, in both give and take, land was purchased and bonds were given. Money is not involved here, cash is not involved here. So if transactions where cash is not involved, those transactions are not supposed to affect the cash position of the company. So then those transactions cannot be recorded. Although the purchase of land is related to investing activity, but cash is not involved. Okay, so we do not record it in this region. We record it nowhere in the cash flow statement. Okay, then at December 31st 2014, which is the last day of the year for which we are preparing the cash flow statement, cash balance is $32,000. Okay, we will use this information. Account receivable information 41,600 was also already used. If you remember, we had used it here while calculating 20,400. Account payable remain 30,000. It is already discussed, so there is no information which is remaining. So that's it. We can conclude and we can calculate the net cash flow. Okay, from the financing activities. So net cash flow from financing activities. Okay, our net cash flow from financing activity is 4,200. Now that we have the net cash flow from all the activities, we can calculate our overall net cash flow during the year. And which year we are talking about? We are talking about 2004 actually. Okay, so it will be the net cash flow from operating activity plus the net cash flow from the investing activities and the net cash flow from the financing activities, because these were the 3 parts of the cash flow statement, or are the 3 parts. So our overall cash flow during the year would be $12,000 with a positive sign, which means during 2014 $12,000 came into the company, actually the net value of that. Okay, so once we have it, so what we will do, we will add up with the beginning inventory. Okay, so we had a beginning cash balance, not inventory, sorry, beginning cash balance at the start of 2014. How much was our beginning cash balance? At the start of 2014, which is the end of 13, we got a cash balance of $20,000 actually. So I will shift the $20,000 here. So we have this. Okay, now once we have the beginning and during the year, we can very easily calculate our ending inventory, which is ending cash balance $32,000. So I will write here ending cash balance. Okay, you can write the date here as of 31st December 2014 as well. It's up to you. So if you see here at December 31st 2014, the cash given to us in the numerical was also 32,000, and we also got 32,000, which means that our numerical went well. Everything was fine actually. In real life, first we calculate this $32,000 and then we shift it to the balance sheet. It's that we are doing practice numericals targeted to a particular topic or objective. Okay, so that's why we have this $32,000 prior to the preparation of cash flow statement was present to us. So this was the solution of exercise problem 5-6. Thank you very much, ladies and gentlemen. Stay safe.